Welcome to The Explainer. Today, we're zooming right past those flashy, fire-breathing rocket launches to decode something that is honestly even more fascinating. We're talking about the highly lucrative financial machine Rocket Lab is quietly building behind the scenes. Look, we all know they can put hardware into orbit, right? But the real question is, how exactly do you monetize the cosmos? Let's get into it.
Okay, let's dive straight into this. $200.3 million. When I first saw that figure, no joke, my jaw actually dropped a little. That is Rocket Lab's record-breaking revenue just for the first quarter of 2026. To put that in perspective, we're looking at a massive 63.5% year-over-year increase. They didn't just meet Wall Street's expectations, they absolutely blew past the top end of their own guidance. But as wild as that is, it's just the tip of the iceberg. Because to really grasp their trajectory, you've got to look at this next number. $2.2 billion. That's a B for billion. This is Rocket Lab's record backlog as of early 2026, which is literally a 108% jump from the previous year. That massive number completely cements their status. They aren't just some scrappy aerospace startup anymore. They are a major financial player with the kind of immense scale and long-term visibility that is incredibly rare in the space sector. So, here's exactly how we're going to unpack this today. First, record revenues and massive backlog. Second, the vertical integration playbook. Third, Neutron, the financial catalyst. Fourth, assessing the investment risks. And finally, number 5, the verdict on Rocket Lab.
All right, let's jump right into part 1, record revenues and massive backlog. So let's dig into that unprecedented first quarter. Rocket Lab didn't just beat revenue estimates, they hit a record gross margin of over 38%. That is a massive signal of operational efficiency. But here's the absolute key takeaway. Check out the makeup of that $2.2 billion backlog. Naturally, you'd assume a rocket company makes its cash on the launch pad, right? Well, look at the breakdown. 58.5% of it is actually in space systems, while only 41.5% is in launch. The lion's share of their future revenue isn't even from launching rockets. It's coming from a brilliant underlying strategy of building the spacecraft and the components themselves.
Which brings us to part 2, the vertical integration playbook.
So what exactly is this playbook? Put simply, it's their aggressive strategy of acquiring and insourcing costly, highly supply-constrained satellite components. You see, Rocket Lab is quietly, completely redefining its economic moat. They're aiming to be an end-to-end space systems provider. If you want to go to space, they don't just want to sell you the ride up there. They want to sell you the solar panels, the software, the robotics, and the entire satellite bus itself. They want the whole shebang. And they're pulling this off through some incredibly rapid-fire strategic acquisitions. Just look at the companies they're bringing in-house. You've got Mynaric, handing them top-tier laser optical communications. There's Motiv Space Systems, bringing Mars-proven robotics and crucial solar array drive assemblies. Solo Aero makes them an absolute powerhouse in space solar cells. And then Planetary Systems Corp completely locks down industry-standard satellite separation systems. It's honestly like they're playing Monopoly and buying up all the most expensive, valuable properties on the aerospace board. They are aggressively seizing control of the tightest bottlenecks in spacecraft manufacturing. And let me tell you, that vertical integration translates directly into massive government confidence. Take this figure, for example, $190 million. That is the value of a recent Department of Defense block buy for 20 hypersonic test flights. When you pair a contract like that with their recent rapid response wins, like the Victus Haze mission for the Space Force, it really drives the point home. Right now, speed is the ultimate currency in defense contracting. By owning their entire supply chain, Rocket Lab can move at a blistering pace that traditional defense giants just literally can't match.
Let's move on to part 3, Neutron, the financial catalyst.
This side-by-side comparison brilliantly illustrates exactly why investors are willing to stomach the heavy capital expenditures required to build this massive new rocket. On the left, you've got their current workhorse, the Electron rocket, which brings in roughly $8.4 million per mission. That's solid. But look over at the Neutron rocket on the right. We jump to an insane 13,000 kilograms of payload, and that revenue per mission rockets up to somewhere between $50 and $55 million. That is a 6 to 7 times jump in revenue per flight. For anyone watching this stock, this is the metric that changes the game. It gives them the exact firepower they need to target the incredibly lucrative mega constellation market. Of course, financial projections are just fancy numbers on a spreadsheet until you actually bend metal and light some fires. And this grounds all those projections in reality. What you're seeing is the successful hot fire test of Neutron's Archimedes engine down at NASA's Stennis Space Center. To make absolutely sure they hit their performance targets, Rocket Lab has been running these engines on 2 separate test stands, 20 hours a day, 7 days a week. They are quite literally squeezing years' worth of traditional qualification testing into a matter of months. And the commercial market is definitely responding to that tangible progress. Just in the first quarter of 2026 alone, customers signed binding financial commitments for 5 dedicated Neutron launches. Think about how wild that is for a second. Customers are putting tens of millions of hard dollars down on a rocket that hasn't even flown yet. It's a huge vote of confidence. Right now, Rocket Lab is targeting the fourth quarter of 2026 for Neutron's highly anticipated debut flight. All right, let's look at the other side of the coin in Part 4, assessing the investment risks. Because hey, no comprehensive explainer is complete without digging into the bearish perspective, right? While those NASA and Space Force contracts are undeniably huge, they don't just magically erase the harsh, near-term realities of space sector economics. The primary risks here really center around that heavy capex and cash burn. Rocket Lab expects to burn through roughly $360 million on the Neutron program by the end of 2025. Plus, you have the natural lumpiness of revenue when you're dealing with massive government contracts. And of course, there is always execution risk when you're trying to ramp up commercial operations for a brand new, unproven, medium-lift vehicle. Developing a reusable rocket is just notoriously difficult. I mean, it's literal rocket science. And you can see that reality reflected perfectly in this timeline. Neutron was originally supposed to fly in mid-2025, but by late 2025, management had to announce a delay to ensure everything was fully qualified. Now they're aiming for pad readiness in early 2026, with that first flight targeted for late 2026. And look, delays like this are expensive. This one extends their staffing costs by about $15 million every single quarter, which just adds fuel to that near-term cash burn fire we were just talking about. Which brings us to our final segment, Part 5, the verdict on Rocket Lab. So how exactly is the broader market digesting all of this? How do you weigh this explosive growth against those heavy, costly development delays? Well, you can see a really clear split in how Wall Street values the company right now. On one side, your baseline fundamental models are pointing to a fair value estimate right around $103.91, heavily factoring in that current cash burn. But then on the flip side, you have analysts like KeyBank setting an overweight target way up at $135. They're viewing the recent stock sell-offs as totally unwarranted, focusing instead on the massive future cash flow that Neutron's $55 million price tag is eventually going to unlock. At the end of the day, leadership's philosophy on this is crystal clear. CEO Peter Beck said it best: Neutron will fly when we're very confident it's ready, and we're not going to break the mold of the Rocket Lab magic. Management is making a very calculated financial bet here. They believe that getting the engineering absolutely perfect on the very first try is vastly more profitable and way better for the brand than rushing a doomed launch to the pad just to hit some arbitrary deadline. Which leaves us with the ultimate question to ponder as we wrap up today's explainer. Rocket Lab is undeniably building an incredibly robust, deeply integrated space systems empire. But can the massive long-term payoff of a $55 million per flight Neutron rocket and an almost monopolistic grip on the component supply chain actually outrun the harsh realities of their near-term cash burn? It is easily one of the most fascinating financial races happening in the aerospace sector today, and you should absolutely keep your eyes on it.